when you look at holding gold or silver for the long term, you say, okay, what are you holding it for? Do you believe the world is going to come apart and currency is going to be worthless and you got to buy groceries? Well, under that scenario, a gold ounce is going to be 10,000 an ounce. How are you going to buy groceries with 1 ounce?
Welcome back to Wall Street Silver. We have our special guest today, Nick Barisheff from BMG Group, it's Bullion Management Group. Nick is a specialist in helping investors find cost-effective ways to purchase and hold physical bullion. Thank you for joining us today, Nick.
You're welcome. My pleasure.
So you have an interesting take on how you value your precious metals. I mean, I know a lot of the members of Wall Street Silver are constantly looking at the spot price of silver, seeing it fluctuate up and down, but you take a completely different view, and you think that's for the most part noise, correct?
That's right. Like, I guess to begin with is I started BMG in 1998. Price of silver was $250. Gold was $275. I really don't care what the price is. Okay, so in between there's a lot of fluctuation, but it doesn't really matter. So long term, do that. So my second point is to say, okay, I'm 100%, unlike many portfolio managers and people in the investment business, 100% of my investment is in physical bullion and in our product. And the reason for that, I don't have anything against other investments, but my analysis is for me to take gold or silver ounces out of the vault effectively and put them into something, I have to be convinced that I'm going to get more gold and silver back at about the same level of risk that I put in. Otherwise, why bother? Okay. The average appreciation of gold and silver bullion for the past, since 2000, has been 10% for gold, 11% for silver. Most pension funds target for 6% and don't get it. And they have a whole bunch of complicated formulas and derivatives and all kinds of other things, when all you had to do was to buy the gold. Every once in a while, a good investment comes along, and it's then that you say, okay, I'll take my gold out of the vault and put it into that investment because I'm going to get more gold back eventually at a commensurate level of risk. So that's the difference in analysis. And the basic reason for that is when you if you realize that gold is not an investment, it's not a stock or a bond or a financial asset, it's the ultimate form of money. It's not a currency either, it's money. So when you have money, then you measure it in that. And in gold and silver, you measure it in gold and silver ounces. A car cost 66 ounces in 1971, same price today, same for silver. So that's the metric. You can't measure something when the denominator is a fluctuating ruler like the US dollar. Gives you totally misleading information. And the price fluctuation of gold, yeah, you can be a speculator and play the daily movements, but as far as I'm concerned, it's not necessary. I'm happy with my 10% a year that I got in gold since 1998. And there'll be a big bonus payoff because sooner or later, this false monetary system is going to implode. And then the price of gold and silver will go up many magnitudes.
Part of what you're suggesting is just buy and hold and don't worry about the fluctuations, if I'm hearing you correctly. But timing's everything. And I agree, if you take, the year 2000 as your starting point, then those percentage numbers annually sound great. But someone, in 2012, who bought at the high, that person's sitting on dead money.
Okay, but
the past decade.
That's a normal psychological phenomenon. Mm-hmm. And that is that with gold and silver, people, instead of buy low, sell high, which is what everybody talks about, people tend to buy buy high and sell low. So if you do that, you're going to lose money. If you bought the NASDAQ in 2000, you didn't break even until 2015. So you can't be saved from that. You're going to lose money.
So just buy at all times for dollar cost averaging? Is that what you're suggesting?
Because if been looking at this for 20 years, that technical analysis doesn't work, in my opinion, for bullion or mining stocks, because they're too thinly traded and too easily manipulated. So technical analysis is meaningless. So the only fallback position is dollar cost averaging. You don't know whether this is a peak or a bottom. So just keep buying. And when you dollar cost averaging, it won't. And the earlier you start, the better.
Mhm.
There's a lot of people that are going to be left out. And when it becomes obvious to everyone that you need this, you're not going to be able to buy gold or silver in any quantity.
Are you concerned about the raw supply problem? Is that what you're referring to? As in, we've interviewed Keith Neumeyer before, and he firmly believes that we hit peak silver back in 2015. Mines are in decline, and it's not going to pick back up. It's just going to continue to slow, steady decline.
Well, it's basically the same thing for gold and silver. But the critical point in silver, which many people don't appreciate, the price of silver is both supply and demand inelastic. Now, what I mean by that is if the silver price went to 200 tomorrow, you couldn't increase mine supply because most mine supply is byproduct.
Yeah.
So you're not going to dig up thousands of tons of copper to get a few more ounces of silver. So mine supply is fixed regardless of price. Same thing when it comes to demand. In your cell phone, there's a minuscule amount of silver, but without it, you don't make cell phones. So it doesn't matter to the price of the cell phone, whether the price of silver is 25 bucks or 250 bucks. You don't make cell phones without it.
Yeah.
And in silver, there's most of the products that are the commodities aspect of silver are irreplaceable by anything else. Your only choice is platinum, but you're not going to, switch silver to gold or platinum. So if the price goes up, it doesn't affect supply or demand.
Mm-hmm.
So that's where the price goes up uncontrollably. And if I was a high-tech CEO making cell phones or Teslas, I would stock up on a lot of silver, because without it, I don't make whatever it is I make.
Well, Keith was actually, the last time we interviewed him about 3 weeks ago, Keith Neumeyer from First Majestic, he actually believes that some of these multinational corporations are maybe not outright buying the mines, but they'll buy a controlling minority stake in some of these miners in order just to secure supply. That's his operating theory, and he thinks it's probably going to happen.
In 1998, Ford Motor Company bought $5 billion worth of palladium, because without palladium, you don't have catalytic converters for gasoline cars, and then you don't make any cars.
Really? Yeah. It would not surprise me if it happens. And there's been a lot of speculation in our community that China is already known to be aggressively out there in Africa and other third, developing countries, acquiring mineral rights, as a strategic ship the ore to China. So China's the only place that manufacturing can even occur for a lot of these products. And, it's just a matter of time before Apple and Samsung, just as a self-preservation manner, need to move further down the supply chain in order just to secure raw materials.
So you have, from a demand point of view, two potential big demand contributors. So the commodity users, particularly in silver, not so much in gold. But in the gold, what you have is the pension funds. There are 4 pension funds in the entire world that we know of that have any kind of allocation of gold. And usually it's minute. Okay, to me, if you want to go standard portfolio theory and consider that everything is normal, which it isn't, then you can do the math. Anybody can do the math, and you'll find you need 20% allocation.
You know, we are starting to see some of those reports where pension funds are, I've heard, you know, a few have started doing 5% allocations towards gold. The whole dollar US Treasury market is essentially a confidence game at this point. They keep printing, and it's who runs for the exit first, right? We just saw last week, or in the past few days, the major Japanese pension fund just dramatically reduced their allocation in the US Treasury bond market.
That's right.
But for some reason, they didn't allocate to gold. They allocated into European bonds, which are negative yield. At least our bonds were slightly positive yielding bonds, and they went out and bought negative yielding bonds. I don't know why.
But well, the US bonds are like the cleanest shirt in the laundry, you know.
Yeah. But I mean, because if you look at Europe, they got the same problems we got, right? Even some would argue in some countries even worse. But
where the vulnerability, in my view, to the US dollar is that the Central Bank of China purportedly has 1,500 tons of gold, round numbers. But what
is that the fake number? That's the fake number that they publicize, right?
That's right.
Okay.
But the thing is, they buy their bullion and it gets imported through this Chinese sovereign wealth fund. And the sovereign wealth fund doesn't report anything to anybody. Now, the people that have analyzed the imports, exports, everything else, mine production in China, believe that China has 6,000 to 8,000 tons of gold. So that's nice.
Is that just the government number, or is that government plus individual population?
It's the government number. The sovereign wealth fund is a government entity. Doesn't count the individuals, and China is promoting that individuals hold, you know, some gold. But the thing was happened that the reporting entities are CPM and GFMS. And both entities have counted every fraction of an ounce in terms of supply and demand. So if China one day comes out and says, oh, by the way, boys, we've got 8,000 tons in total. The big question comes is, where did you get it? Because it's being accounted for. The known supply demand has been totally accounted for accurately. What hasn't been accounted for is the leased gold.
Mm-hmm.
And the leased gold comes from several different things. The bullion banks lease gold. The bullion banks also redeem from the ETFs, okay, and then sell the bullion to China. So what you have is a bunch of IOUs in the US Treasury and China with the gold. What do you think happens to the US dollar on that day?
Yeah, and that's if you even believe we have 8,000 ton, or what is it?
But it'll be evident to everybody that you don't.
Yeah, 8,134. Is that the number we're claiming still?
That's right.
What's your personal view on that? Does the U.S. government still own that much gold, or
no? Because you can't make the supply demand and then the leasing numbers. The first book I read on the subject in 1998 was called The Gold Book by Frank Veneruso. And in 1998, he looked in detail at the GFMS and CPM figures and came to the conclusion that out of 32,000 tons of central bank gold, 9,000 are out on lease.
Mm-hmm.
Now, when you lease gold, it's not like when you lease a BMW, you got to return the same BMW. With gold, it isn't. So as a result, they have an IOU from the bullion bank, and a central bank still counts the gold as being gold. But what they have in fact is an IOU from the bullion bank. He concluded that 9,000 tons were leased in 1998 out of 32,000 tons. By 2002, he updated that, and his conclusion was that 22,000 tons out of 32,000 central bank gold as being leased.
So does the gold actually leave the the
It's in
federal?
China and
It's
it's
been
not coming back.
it's been moved, literally moved
Yeah,
to China, and all we have
because
is IOUs.
this is the illogical thing about leasing. When a bullion bank leases gold, it gives the central bank an IOU, and it promises to return the same number of ounces of LBMA gold, not the same bar. They lease the gold, they get cash when they sell it to China, invest the cash in treasury bills, and what you're doing is playing the interest differential between the leased gold and treasury bills, and it's free money.
How much are there any reliable estimates out there about how much gold the US government, how much they actually still
No, because it
own or retain?
hasn't been audited since 1950. Ron Paul has tried several times to get an audit, and every single time they fought back tooth and nail to prevent it. If you really have it, go ahead and audit it. It's not enough to go in the vault and count the bars. You have to check the history of it and so on. And you have to make sure that that gold sitting in the vault isn't leased to somebody else, that you actually own it.
Mhm.
So when we run the bullion fund, we go through a great deal of diligence to make sure the gold is free and clear there in the vault, can't be leased out to anyone, no one can do anything with it, et cetera, et cetera. But that's a complicated process that the average person can't and won't do.
Gotcha.
Just because it's in the vault, like the ETF, doesn't mean the ETF owns it.
Are there any, I mean, I get it, there's no audit done, so we can't be sure, but are there any reliable estimates out there? I mean, obviously some gold is in Fort Knox, some gold is in the New York Fed's vaults in New York City.
Yeah, but the question is,
But the
who
question
owns it?
there's some there. We
Who
think,
owns it?
but the reliable estimates are the 8,000 is not there. It's been reduced by some number. But
Well,
we, and what is there? Let's just pick a hypothetical number. Let's say 5,000 tons is there. We're just not sure how much we own anymore. Is that the argument that we're
We'll
making?
only know for sure when China announces how much they will transfer the gold from the sovereign wealth fund to the central bank and say, hey, guess what, boys? We've got 8,000 tons. Then
Gotcha.
you'll know how much gold is in Fort Knox.
Gotcha.
And Nick, what happens at that point when they do that to the US dollar and our
Dollar crashes.
So, you know, a lot of people talk about the dollar crashing eventually. But if you go back to the 1970s, let's talk about the actual buying power of gold and silver at that time and how it's changed. And from my perspective, the dollar's already crashed from that time, you know.
Hey, in gold ounces, it's crashed about 90%.
Yeah.
In purchasing power. And this is the other thing. A lot of people, think that you need inflation to preserve purchasing power. Gold actually does better in a deflation because everything else crashes more than the price of gold might go down in a deflation, but everything goes down even more.
So the buying power increases.
That's right.
So where do you see, I mean, what could you buy in the 1970s for X number of ounces of gold? Can you buy an equivalent number or item today? Can you buy more? And do you see that buying power increasing as things progress?
Typically, in most instances, and there's a website that gives you a whole list of things priced in ounces then and now. And most you can buy more stuff today with ounces of gold than you could in 70 when the gold price was fixed at 35. See, the other thing is gurus say, well, gold hasn't done very well because if you look at the Dow from 1875 to today, the Dow has outperformed gold. Well, gold was fixed and priced till 71. That's an irrelevant measure.
Is your ounce of silver going to buy significantly a lot more?
Right.
Like, could you buy more real estate with, silver and gold in 5 years than today?
Silver has two attributes. It performs better, but it's also more volatile. So the fluctuations, you have to watch when you're going in and buying and so on and so forth. So apart from dollar cost averaging, if you look at seasonality for both gold and silver, typically say the summer is a low point, that's when you buy. The fall usually goes up. January usually goes up. And there's charts that deal with seasonality. So that tells you when to buy and not buy. So that's the thing. I believe silver first has to catch up to normalize with gold, because gold to silver ratio is typically 40-1, and now it's like 80 or 90-1. So silver's got to double to normalize. And then after it normalizes, it's got to go further. And for most people to get any number of ounces would be cost prohibitive in gold, but very doable in silver, particularly dollar cost averaging in. You don't have to wait till you've got $2,500 to buy an ounce.
Mhm.
So the other thing with silver, so when you look at holding gold or silver for the long term, you say, okay, what are you holding it for? Do you believe the world is going to come apart and currency is going to be worthless and you got to buy groceries? Well, under that scenario, a gold ounce is going to be 10,000 an ounce. How are you going to buy groceries with 1 ounce? You can't
Exactly.
make change. So that silver in that scenario might be $500 an ounce. So it's a little more practical.
You've made the argument that there's a path to gold 10,000. And what's your analysis for how we get to a gold 10,000 and then presumably to a silver, which, a 40-1 ratio, which would be in the range, what would 40-1 on 10,000 be? But just give us your logic for how you arrive at gold.
Okay, so the $10,000 gold, I wrote the book in 2013. And, the interviews then were all treating me like a lone wolf in the wilderness. You got to be crazy thinking gold's going to be 10,000. Well, a lot of people, Jim Rogers, Jim Rickards, everybody now are talking 10,000 or more. So it's not that out of line. The reason to get to 10,000 is up until 2011, there was almost a near perfect correlation between total US debt and the US dollar price of gold. It diverged in 2011, and now they separated. So that for gold to normalize back to the US debt level, particularly with the amount of money being printed recently, you need 3,000 gold just to catch up.
Mhm.
So that's where we're at. But the second thing that you've got to consider is the US going to continue borrowing money? And lately, since Biden's been in office, they're borrowing money at historic levels, numbers never before seen. And there's no indication that that's going to slow down. And that's where it ultimately gets into a hyperinflation scenario. You can't print trillions of dollars and not end up in hyperinflation. Every empire that's ever existed in the world has in the end fallen apart due to hyperinflation. Every single one without exception.
Your argument then, which I'm fully on board with and I agree, is they can't stop printing. They're going to keep hyperinflating the dollar or inflation
Until it blows up.
So essentially, at that point, it doesn't even matter. There are no estimates for in dollar terms. We're not going to be measuring gold and silver in current US dollar terms. We're going to be measuring gold and silver in a future currency, whatever the replacement for the dollar is.
Well, and unless and eventually, I think they're going to create a new currency, whether it's SDRs, and there's going to be a significant backing buy gold and maybe silver.
Mhm.
Like they might create an SDR with a certain percentage of gold, silver.
Mhm.
But the currencies, when you get to a hyperinflation, will lose so much confidence that people won't believe it. It's like the German hyperinflation. In the beginning, gold was 75 marks an ounce. 3 years later, it was 23 trillion marks an ounce.
Yeah, and that's essentially meaningless. There is
Right.
no one will take any marks for ounces of gold at that point. It's meaningless.
I think it always
But
comes
at
back to
that
like,
point,
what can you buy with it, right?
you buy land and food.
Yeah.
Yeah.
And so, a 10,000, you've mentioned a 10,000 gold target just to have a number on it for now. Obviously, we probably go way beyond that at some point.
Yeah.
And then a 40-to-1 ratio for gold to silver would be a 250 target for silver
Right.
in this process. But, under that same logic, essentially, we're not measuring hard assets in dollars anymore. And it just probably blows right through that.
That's right.
And I buy silver for the same reason. I have I have a few ounces of gold also, but nothing compared to what I do with silver. And I'm fully on board with that. But it's like anything, it's timing. You don't know when it's going to happen. Do you think this, do you put a time frame on this? Obviously you said this in 2013 and here we are 8 years later. But I just see what's going on with Biden. And I don't want to make this political because Trump was doing the same thing. Trump was by no means a fiscal conservative either.
Well, they didn't have it. It wouldn't have mattered who was in, maybe how much money Trump would have printed versus Biden are two different things, but they both would have printed.
Yeah.
So that's the thing. Where it's difficult to put the timing on it is because these are not normal markets. They're manipulated.
Mhm.
So the question needs to become much longer will they keep up the game and the manipulation, and when and what will cause it to blow up. It doesn't take an event necessarily. Like if you look at a flock of blackbirds, where it's like a cloud and they're all flying in one direction and suddenly they switch 180 degrees. Well, how did they all switch at the same time? That's what happened in 1929. Nothing happened that day. Everybody just decided to sell. Now, knowing when that is unknowable.
Yeah. But you see what's going on right now. They're about to pass another $3.5 trillion infrastructure bill, plus another bipartisan $500 billion. So we're looking at $400 billion, 4 trillion, over 10 years. So add another 400 billion in spending per year.
Right.
And it's just sort of mind numbing. Remember when we used to think 1 trillion was a big number? It was like, oh my God, we have $1 trillion deficit. Oh my God. And now it's like 3 trillion. It just doesn't even make the news anymore, right? No one is talking about this. It's not, they'd rather talk about, anything except for what we're doing financially to the dollar.
The news is not news, it's propaganda for both the mainstream media and the big tech companies. So it's very hard to get to the actual truth.
I'm amazed we're still allowed to talk about this stuff on YouTube, but I guess that might be a sign if we start getting removed or demonetized for even talking about precious metals or collapse of the dollar or things like that. I mean,
Right.
so far YouTube hasn't, Kitco and Stansberry and some of the bigger channels and Mike Maloney, they seem to haven't been affected, and they've been talking about this for years. So I assume we're safe also. But Nick,
the way I look at it is that if you've invested in silver or gold bullion, and it's generating plus or minus 10% on average, relax and sit back, and eventually you'll have a big bonus.
Mhm.
I'm not investing in silver because I expect it to go to 250 tomorrow. That'll be nice and I'll make a lot of money. But in the meantime, I don't have anything. Like I'm a real estate bug as much as a gold bug.
Mhm.
But I'm not going to take my gold ounces out of the vault to buy real estate at today's prices.
Yeah, no,
Except maybe Florida.
yeah. Well, no, a lot of people want to sell, but I'm like, God, if you sell in Florida now, it's like you just got to buy at some inflated price somewhere else. So what's the point, right?
That's right.
It's anyways, but Nick, thank you very much for your viewpoints on all these issues. We really appreciate it. And let's talk again later in the year. It's shaping up to be a really interesting year. A lot of,
sure.
and I think we are living in very epic times that we will look back in history, and it'll be one of those things like we talk about the Weimar Republic as like the example right now.
That's right.
I think when I'm 30 years from now, we'll be looking back on this time frame as what the heck were we doing? What were they thinking?
You're absolutely right.
And who knows whether we'll be on a gold standard or what in that future. But hey, maybe this will all still be on YouTube, and we'll be able to look back and laugh. Well, thank you very much, Nick. We appreciate it.
Okay, my pleasure. Thanks for having me.
Take care, Nick.